showcase called the Venture Loft Fundraising 101, hosted by Andrew Young. My friend Zach told me to check him out, so I did, and do the follows and request the invites, and got approved to attend this thing. It looks like they host a lot of events, little dinners and cocktail parties and sessions like these. I'm very curious. It's in some kind of private loft right above here, 4 floors up. Hey, there it is. I'm a few minutes early. Found the spot. Andrew Young has been referred to as the Gatsby of Silicon Alley. That's cool. Looks like there's 2 general partners that are here. Jeff Becker from Antler.
I am the general partner at Antler. We say we're the world's largest Inception fund. We have $1 billion under management. We exist in 27 cities around the world. The way it operates is we invite really smart people together to work together, build companies, find co-founders. In that process, we get conviction over the execution, and we try to be that first check in. I think that's a really healthy way to work with founders in the very, very beginning. We do that about 500 times a year around the world. We back 1,300 companies to date, and it's just growing like a weed.
Jesse Middleton from Flybridge.
So I run a firm called Flybridge Capital, about $1 billion under management. As well, we're really focused as a pre-seed and seed fund headquartered here in New York. We invest 3 key areas. The first one we talk about is developer platforms and infrastructure. The second area is enterprise software. Today, that is all Agentic AI and very old horizontal software. And the third area we talk about is native AI applications. We think of it as sort of full stack, never before possible products, things where how does AI change the creative process? How does AI change the writing process?
And we're talking about some good topics tonight. When you should and when you shouldn't raise venture capital. Pitching investors and building a strong narrative. Sound familiar? Building relationships with VCs and angel investors. Wonderful. Mistakes to avoid when fundraising. Discovered lots of them. Deal dynamics and negotiations. This is right up my alley.
All right, thank you everyone for coming. We're gonna get started in 1 minute with a real treat for you guys.
Well, hello everybody, welcome. I'm Anastasia Crew, I run startups at Notion. I'm usually based in San Francisco, so I'm super excited to be here and meet all the New York City community. How many are first-time founders, folks who are raising their first rounds in the room?
I was on the founding team of WeWork here in New York, so I built that from 4 people to almost 4,000 employees. I left in 2017, and hindsight's 2020, but that was the right time to leave. So ask me anything you want, I'll probably tell you. One of my partners says something like, there were 10x engineers because of the rise of cloud and developer tools. We're gonna see 10x marketers, we're gonna see 10x parents, we're gonna see 10x husbands or wives. And so how does technology sort of shape that?
We're in similar shoes, like all of us, right? Like I'm out fundraising. Jesse was just telling me he's on a fundraising trip. You know, we're out there raising $100 million. It's not different than raising 10 million. It's just a bigger bogey and a lot more conversations and different customers.
There's a huge technological shift happening. There's a lot of value to be created, and there's a lot of really smart people like building today something new and different and interesting. And so I view it as a net positive to the whole world, but you're certainly not going to see a lot of the venture funds that are out there in market now around in 3 years.
There are still tons of founders, but they're just competing for a lot less capital, just like the GPs. I think what that means in your fundraising process is probably waiting a little longer to fundraise than you think you should. Getting the traction, getting the metrics, having something that's believable and durable, maybe eating into your own savings a little bit, or like going into friends and family and really stretching those dollars so that when you go to market, you have something compelling and something that you can sell to an investor. Being creative and sounding different.
And one thing I'll add, you mentioned like maybe you raise a little later, a little further. I think the worst place to raise is in the middle. So I would say you can raise later. You can also raise earlier. We do what you make money. The moment you have data is when you have to answer for the data.
Founders show up and throw up. Like they show up on a Zoom and they show up in a meeting and it's like pitch deck, click, 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 the same 10 slides. Like, I'm like, man, like who's different? You know, like who stands out? And I think you can be different by being brief. You can be different by being creative. I don't know how many deals you're seeing, but like whatever you're thinking, multiply it by a lot. And so I really think about your approach to it. I would think about the durability of your business. I would think about when you got to raise as a function of when GPs are investing. I don't know, it's pretty slow over Christmas and pretty slow over 4th of July. I wouldn't start your fundraise like the week before Thanksgiving, for example. So there's like little nuances to timing and building durability and having a good pitch that I think in this market is even more important because of the contraction.
If you have an opportunity to tell a compelling story, not throw up. Show up and throw up is a great line. I like this.
Awesome.
If you have the opportunity to not show up and throw up, but to show something creative, interesting, a great story, maybe some early ideas, maybe some early conversations, but not data, you may find that to be a valuable time to go and raise a round. The worst place is like your first 1 or 2 customers, your first month or 2 of revenue, and then everybody's either saying, well, show me in your 6 months or 6 customers, or the worst question you get is like, why isn't it bigger? Why aren't you further? Why? It's like the dumbest question to ask, but it's an easy deflection point because it's like, I wish you were larger now and then I could invest. And you're like, well, I'm not.
Yeah.
So what do you want to do?
Well, I guess VCs were buying time because time is information, right? So it's like, if you're going to give me a chance to wait, I'm going to wait. If I don't have to invest, I'm not going to invest.
To be clear, our LPs are in the same business. You're talking about fundraising. Our LPs are like, when's the final close?
Yeah.
How long until the final close?